Talk to you guys this week about financial projections. I know that this may feel like quite a daunting task and focus, but ultimately want to be able to get you in a place where you don't have this nervousness ultimately around your financials and having to manage your profitability after the fact and based on your bank balances. The thing that really happens in a lot of cases is that agencies will end up discounting fees in order to make a sale because they feel like they have to do so in order to cover payroll, but not really having a clear understanding of whether that's the case or not. And so, what I want to do is actually have you be able to have a projection and understand exactly where you are today, exactly what the gap is between where you are today and ultimately where you need to be to, at the minimum, be profitable, and give you a methodology to be able to manage that. The thing that I want you to think about here is that if you are really unsure, let's say that you're moving into a new place and you're buying furniture, ultimately what you're going to need to do, right, is you're going to go measure the furniture, you're going to go measure the place to see whether those things can actually fit, whether that's actually going to work, whether that piece of furniture is ultimately going to work and whether it's going to fit and whether it's going to look nice within that space. And you know what that size should be, but you don't know that financially for your business. And so, what I want to do with you today is actually go through exactly how that's going to function, exactly how you can measure your financial projection, and spend a little bit of time being able to go and build the framework around this. So, with the QR code that you have listed here, you're going to have access to this template. This is a template I've built for clients to allow for them to be able to do exactly this. And so what I want you to do is once you've logged in, I want you to make a copy of this because you're not going to be able to directly edit it. And once you've made a copy of this document, you're going to go ahead and do three things here. You're going to first start with your committed expenses. You're going to go ahead and fill in the employee or vendor name, the total annual cost, and you're going to break the cost over the period of time. If they're a project-oriented freelancer and they're going to be paid at X and Y spot in the project, go ahead and list that out. And then what your monthly costs are for software, for your own compensation, for all of those items that are necessary for you to be profitable. Once you have that, I want you to list all the existing revenue that you have, client name, the project, the total value of that project, and then ultimately break it down of when you expect to bill that revenue so that you know exactly what's going on. Ideally, for the vast majority of you, you're collecting pretty quickly and you're not on this long collection cycle, but ultimately when that's going to bill. And then finally, I want you to actually list out what you have as existing opportunities within the pipeline, what the client name is, what that project is, the total value of that opportunity or deal, where that is in your sales cycle. Is it a initial conversation? Have you had a discovery call? Have you presented a proposal? Have you had a follow-up conversation, which is going to give you the percentage likelihood that you should be at, right? And you're roughly in a 10%, typically speaking. I'm talking about generalities. And if you have the data of what is your likelihood of closure, that would be more impactful. But typically 10, 15% an initial conversation, and 20 to 30% when you've had a discovery call, 50 to 60% when you have presented the proposal. In a follow-up conversation, you're going to be in the 65 to 75%. And then at a verbal yes, you're going to be in 85 to 90%, allowing for you to have that understanding. That's going to pop out formula related or formula based and what your weighted total should be. And then you're going to break that down over the course of the year of what and when that revenue should follow. Then you're going to have on this page the summary sheet of your committed revenue and your weighted revenue, right? So here's the total potential revenue that you have month by month. This is going to break down whether you have a variance between, so this is your break-even cost. So this is what you have to be selling in order to be able to be profitable. And so this is your variance, right? So this is a positive or negative number of where you currently are month by month. And then total revenue, including the weighted pipeline of your positive or negative number there. This gives you a phenomenal framework to actually build through where you currently are financially, not having to be worried about where you actually are, but actually knowing where you are. And if there is a gap, then knowing exactly what that gap is so that you can fill that gap and make an informed decision. I don't want you to be making it based on gut, on, hey, this is what I need to be doing, but knowing really where you need to be so that you can ultimately be profitable. ultimately being able to have the financial security that you need, being able to build on that. So what I want you to do is make a copy of that spreadsheet, that Google Sheet, fill it in for yourself so you know exactly where you are. If you have any questions and you do have a gap and you want to actually be able to help fill that gap, do me a favor and post in this Facebook group. Allow for us to be able to give you a little bit of some advice, a little bit of strategy, and help you be able to do that. If you're interested in having a one-on-one conversation, happy to go ahead and do so as well. And do me a favor and go to creativeagencysuccess.com/get started.